Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning. Oops, there's my background. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Dennis Dick. Joel is out on vacation. I know it is sad. We tried to convince him to stay, but we couldn't compete against the allure of Northern Michigan. But the show must go on. Hope you all had a great weekend. What are we going to talk about today? You know, we're going to talk about Virgin Galactic and all the space stocks, obviously. Right. Obviously, that'll be the lead story of the day. Big mover of the day on my radar. We had some drug news out on Friday afternoon, ticker CLDX. We're going to talk market structure with Tim Quast at 8:35. And we'll talk this week IPOs with Matt Hammond at 9 o'clock. Go ahead and smash that like button. Get the week off to a great start. If Joel were here, he would say, well, the S&Ps, I've got the SPY up because I'm more of a SPY guy. So SPY is down 73 cents this morning. Let's go over to GLD, which is down 30 cents this morning. We've got USO, oil down as well. I'm more interested in Bitcoin this morning because crypto is getting punished. Why? I don't know. Bitcoin is down 2%. Ethereum is down also like 2%. So crypto is down and falling this morning. Dennis, how was your weekend? I just saw, this is off topic, but I just saw that the Senators hired Pierre McGuire.
Really? I didn't see that. When does that happen?
Some front office stuff. I don't know.
Everybody hates Pierre McGuire in Canada. It's probably because he's TSN analyst for so long and he's very he does on every single player. He always talks about where they played in junior, what they did in junior, and it's like so much in depth on all the players. I always liked Pierre McGuire. I like that background stuff. I was like one of the only people that I actually like Pierre McGuire. Okay, he is knowledgeable, man. Okay. There is no doubt Pierre McGuire knows a lot about hockey. He knows a lot about what makes a good hockey player. He watches them young. I like that. Where's he doing with Ottawa? Did they say scouting department?
Player development stuff. I don't know.
That's good, man. Anyway. I like Pierre McGuire. I know a lot of Canadians are going to say, "Oh, you like Pierre McGuire," but you know what? I like Pierre McGuire. I was one of those that actually, Pierre, I like you.
Okay. Did you watch the stream over the weekend? The launch. I did. Yeah. Me too.
Yeah. So, what were your thoughts? I'll let you give your thoughts first.
Well, for this is actually a little bit funny. So, I realized I remembered about it on Sunday, and I turned it on. I was like, oh, like Benzinga could restream this. So I did from Benzinga, but by the time I got the stream up, they were already on the way down.
Oh yeah. Oh, you missed it.
But anyway, I watched it live while I was getting that set up, and the feed obviously had some glitches.
It wasn't great.
World. Very surprised to see Stephen Colbert there for some reason, and it seemed cool. It was a little short, but it seemed cool. I mean, the actual in space part I'm referring to, was a little short, but seemed cool.
I think you hit the nail on the head. A little short. I expected that it was going to be longer than like 2 minutes in space. Yeah. Like somebody's paying $250,000. You're going to blast them up. It's a 90-minute ride. Like we all heard like it's like 80, 90 minutes. So I was like, oh, I thought they were going to be in space for a while. I don't know why. I thought I never really thought about the logistics of it. I guess it can't orbit. I just thought they'd be up there more than like a minute and a half or 2 minutes. So they basically blast them off. For anybody who hasn't seen it, they're flying around with the other plane or whatever that's carrying them, and then eventually they drop that and they let that blast straight off into outer space. So it just gets to the fringe, and then they just basically let it fall back down. So it's basically rocket ship shooting it straight up and then just letting it fall back down to Earth. And you get that 1 or 2 minutes that you're up there in space. You're gonna have the great view, and you feel that weightlessness, and they're gonna ask you to get strapped back in. So I was very disappointed that it was only going to be, like I always said, this is something cool. I would do this, if I had the money, $250,000 just to burn. Right. It sounded pretty cool. But it's going to be a minute up there, $250,000 for a minute. I don't know. I guess you get all the experience of the rocket ship getting blasted off, and that's probably where I'd get sick and probably wouldn't work out for me anyways. I'd throw up in the 1 minute that I can look out the window, but I don't know. So I'm overall disappointed, actually, that it was only that long. From a stock perspective, I tweeted out last night what I thought was going to happen. I was like, I think the stock actually is going to take the trajectory of the ship. I think it's going to blast off at 4 a.m. and then fizzle out and then come back down to earth. Let's show the chart and see how I did.
This is a 1 minute chart. So that first candle,
it was all in the first minute. So it didn't blast off. I thought it might stay up there for a bit. It didn't even stay up there. It literally totally the first minute was the trajectory of the ship. It all in the first minute. It traded up to almost $60 in the first minute just after 4 a.m. Again, the 4 a.m. traders, the ones that have to get in there to buy it, wake up early at 4 a.m. They're usually on the wrong side. We talked about that. I retweeted a link, that we were talking about in the morning when they were trading, chasing Kathy Wood moves, 4 a.m. trading. If you're going in there and you're buying stocks up 20%, you're usually doing it backwards because, you get all excited. There's no liquidity. You got to buy it. There's nothing there. And then real liquidity starts coming and say, this price is stupid. They start to knock it back down. So this stock had traded almost $60 at 4 a.m. is now trading 50. It looks to me like it wants to go red. I'm not going to argue with it. I think this is as good as it gets. We often talk about, is this trade now as good as it gets? I think it is. I think, what do we have to look forward to? I mean, everybody's been looking forward to this event. Stocks always want something to look forward to. So you look, it's like, okay, well, now we look forward to, I guess, people actually doing this experiment, and going into space, and maybe they get some revenue. That's cool and everything. But the hype of that first blast, that's all kind of gone. So it's kind of like the hangover after the party now. And I think you're going to see the stock go red here today. It just feels like it now. It's been leaking for the entire pre-market. When I came in around 6:30, it was 53. Now it's 50. We know at 4 a.m. it was almost 60. I think it's going red.
What about Goitoy? Isn't 4 a.m. just bots though?
Oh no, there's not a lot of bots at 4 a.m. It's hyped up. It's hyped up traders, like excited traders. There'll be some bots, but there's less bots in the pre-market than there is in the regular session because there's so much more risk. So there's a lot of machines that aren't even online. And don't forget, when you're a high frequency trader, there's usually if you're running a pretty big operation, you've got traders monitoring those systems, and and even if you're a mid operator, you've still got to have somebody managing and monitoring those systems for the most part. A lot, I would think so. Anyways, maybe there's some that just run them with nobody watching, but that's a dangerous game. So usually you have somebody, just in case something's not going right or something, bad data or anything like that happens, somebody monitoring the system. You don't see a lot. There's algorithmic action everywhere, but you have less algorithmic action in the morning than you do at like 12 noon, for sure. And there's less arbitrage going on. So I think you just get very excited traders. Everybody's getting their order out there. Everybody can trade pre-market now. I know certain systems don't offer before 7 a.m., but if you go around, there's lots of retail brokers, interactive brokers, lots of retail brokers offer 4 a.m. trading.
Yeah.
There's just people that are excited. There's no market at 4 a.m. It just opens. So what I mean by no market is sometimes stocks, there can be some smaller stocks, have no bids and no offers. You didn't pay anything for the stock. So it's usually uninformed money a lot of times. And then the professionals that are up at that time are saying, okay, well, that doesn't make sense. I'll sell it. So you see this blast off, and then you get the professionals all saying, maybe stuff, like what I was saying. Okay, well, what's it have to look forward to here? Looking at it, takes a lot of guts to come in and short this thing at 58 or 59 when it's going straight up in the first minute. But as soon as it starts to like you get the blast off and then it starts to leak a little bit, that's probably when they strike, and that's why you see it come down fairly quickly after that. So I think you have a lot of people who just don't know what they're doing at that time. And like I said, I traded 4 a.m. for years. Lots of uninformed order flow out there, meaning there's people who are putting orders out there that literally don't even know how to price stocks. And that's where you have an advantage. If you've got some quantitative approach to it, you probably got, some mispriced securities at 4 a.m. And when this was trading up to 59, it was clearly mispriced because here we are 4 hours later and it's 50.
I do want to mention, if you are up at 4 a.m. Eastern time, Benzinga has a show at that time.
Wow.
I know, we're everywhere, Dennis.
Everywhere.
The early bird morning show.
Apparently good form.
It's 4 a.m. Eastern time right here on this channel on YouTube. Okay.
Cool.
So We saw that happen in space. That's obviously the main one here this morning. But if I go to my movers tool in Benzinga Pro, which I will do, and I go to my what's up movers, and I look at it, I see, I see a bunch of space stocks. I see like ASTS up there, right? I see, where else was I looking?
Maxar was up.
Yeah, Maxar. It looks like it's come down a little bit since then. Where is Maxar? I think it's come down.
It's up 3%.
It was off the top of there. There's Maxar.
They're coming down with space.
Yeah, they're coming down now, right? But
this is it. They blasted all these stocks, these space stocks off in their rocket ships at 4 a.m. and now they've been leaking. They're coming back down to Earth. So that's the landing here. They're gonna stick the landing. But it's I think the better times, and maybe I'm wrong. Maybe they're gonna come in and say, oh, it's gonna make profits now. And maybe a lot of people thought it was cool. But I had two issues, like I said, with space. Just bring back to it. One, I thought the flight was the time in space was too short. I think it's going to turn some people off. I didn't realize it was going to be that short. You said you didn't realize it either. And then two is, well, the feed wasn't great. But two, it's just the hype. It's been hyped. And this is going to be the peak hype today where everybody's talking about over the weekend. Yeah. And then it got another blast off early here, and it's starting to leak.
That's a good thing. I thought hype was good. No?
Yeah, but this is the peak hype. You want to sell, think about, what Chris Camillo says, about information parity.
Yeah, okay.
Like you get ahead of the trade where everybody's going to be talking about, and all of a sudden everybody's talking about it. That's usually signs where you're getting close to a top.
I don't know if it's peak hype though, because we got 8 days before Bezos is going to space, right?
But that's not their company.
No,
I think it is peak hype. It's maybe not peak hype for the space talk, but it's peak hype for Virgin Galactic talk. They were on CBS. They were on NBC. I mean, they're on mainstream media here over the weekend. Yeah. So I honestly think it's peak hype. So that's why I would not buy it here. And if I owned it, I would sell it. Just my opinion.
I don't know if you called this on Friday. You probably didn't because the tweets were deleted. But the Blue Origin Twitter account on Friday tweeted about how we're going to the Carmen line and Virgin Galactic's not. And then an engineer from Virgin Galactic responded like, "You guys are being petty. This is ridiculous." But like it was just a Twitter back and forth between Blue Origin and Virgin Galactic. But then the guy deleted his tweets, so you can't see it now. But I thought that was funny. It was just like they were just arguing on Twitter about who's more legit, because one, Blue Origin's going further into space, but
how far are they going? Are they gonna? Is any of these? Any of them gonna orbit?
No one's we're not there.
Hard
yet.
To orbit, eh? You gotta go too high. Is that what it is? Too high and too fast.
Blue Origin's going 100 kilometers into space.
Okay, same thing. Like blast them off, just drop them back down. It'd be cool if they could ship you up there and like orbit you. Like I don't know who's coming out with that. That would be cool.
Yeah, but that takes a long time, doesn't
it? Well, it doesn't have to go it has to go pretty far, but you probably have to go really fast to get into orbit, I would think.
I don't know.
Like it's like 20,000 miles an hour, isn't it? Like the satellites that are orbiting. Like they launch the satellites, they orbit, but those are way the hell up there.
That's true.
I don't know. We don't know enough about this, so we're getting definitely past our expertise level here. But
okay, so the takeaway from you seems to be you are interested in selling any rips on space.
It already had the rip.
Well, it had one rip. Who's to say at the opening it couldn't go higher?
Yeah, I'd be a seller of rips on it. I think the better days are. I think we just saw peak. That information parity that Chris talks about. I just think we saw peak hype. And I like to sell stocks in the peak hype. So 59 this morning was a gift. I don't think you're going to see that again. I don't think you're going to see 55. You might see 53. But, anything can happen. Maybe it just blasts off and keeps going. But I don't think so. I think that it feels heavy. It doesn't feel like it wants to rally in the pre-market either. It doesn't feel like, okay, well, we had a big rally and we kind of just pulled back a bit. Now we're going to rip up again. This thing's been leaking the entire 4 hours of pre-market since the blast off at 4 a.m. So I'd be scared buying this thing here.
Yeah. So we looked at Maxar. You can look at ASTR, which is Astra. All these satellites.
Those are all going to follow this.
Yeah, they're all going to follow space today, and you can see it. You can see that, right? You can see that. So it's
if space goes red, look out for these things too. I'd be careful on all these things. They're already leaking because space has leaked so much. I mean, you come in here like, oh yeah, space having a great day. It's up $1. Well, I was up 10 at 4 a.m. So it's not a great morning for space.
No,
sorry.
All right. Do you want to talk about China? Because there's more stuff at there's always
my goodness. What now?
What now? I don't even know where to begin, honestly. We could talk Didi, which got removed. First of all, Didi formally warned now about the risks to the business. The Chinese antitrust body has blocked a merger between Douyu and Huya, Huya, Doyu. That's off the table. They're asking Tencent Music to give up their exclusive licenses or something, and they're asking all companies that are interested in listing on foreign exchanges to now abide by new regulations. It's holding up TikTok IPO, not TikTok, the TikTok IPO. And there's just it's a mess. The whole thing is just there's like a half dozen headlines this morning all about China.
This is just seems to be the theme here, and it's I mean that TME chart, holy mackerel, that's an ugly chart. That thing hit $30 back in March. It's $12 now. If you look at the charts, it's been leaking, and I mean we keep coming to, at a certain point you think, oh, is it cheap enough? But then you think, well, I don't know, China's going to continue to regulate everything over there. Maybe nothing is cheap. So it makes it difficult to invest in China. It's turning off international investors when you're seeing, them come in and obviously excessive regulation or whatever you want to call it. But when they're trying to control certain companies, it's scary to be an investor. I own Alibaba, just the one little piece that I've had for years. I sold all my extra stuff. I've lightened up all my China holdings because I'm just scared right now. And it was a nice rip on Friday. So if you've been overexposed to China, you got a nice rip to sell into. There's a nice snapback rally in BABA. People all claiming, yeah, the bottom is in. Is it really in, though? Let's talk about really that price action. It's a nice candle. Yeah. Do you have a level to lean on at 198? Sure, if you want to try and you think that's going to be the low. But nothing keeps going straight down. Here I am talking against my book because I do own a little bit of BABA. But I mean, this thing lost 35 points in 5 trading sessions. It's not out of the realm of possibility that it could bounce 6 or 7 and then, consolidate and then resume the previous trend, which would be clearly down. Stock is dirt cheap, but when you have all the unknowns of China right now, nothing is, necessarily cheap over there. So I'm still hands off on China stocks here. Although if you got them on, if you're looking for trades, I would try to lean on those Thursday lows. Take those out, then I'd be spooked.
For across the board, not just BABA.
All of them.
Right.
Grouping them all together.
Right. JD.
Well, yeah, JD's been best of breed. Like if I was going to buy one, JD would be one that I would look at. I would lean on Thursday's low, though, 69.83. So if you're pulling back a little bit, you think I'm going to get 72, I'd stop myself out under 69.83. Again, we're broken record here to a certain extent, but you can see what I do. Control the risk. You're coming in. Where's my out? First question is, this is everybody starts. How much money are you going to make? Now, don't start with that question. How much money am I willing to lose? That's your first question when entering a trade. What am I willing to lose? So if I'm going to buy this at 72 today, I'm saying I'm going to stop myself out at 69.83. I'm willing to lose about $2.50. I like to at least make 2 to 1. So do I have a shot that this thing, I can make $5 on this? So if I got it at 72, could I go to 77? Yeah, maybe. If it got down to 71, fills that little gap that I had on Friday, maybe it's a little bit better. But again, you're fighting the trend here. These aren't easy trades. The overall trend in JD has been down here for the better part of 4 months. It's broken its overall uptrend from 2020. Baidu probably looks similar. Yeah, Baidu's completely broken. I mean, these are broken charts. So it's not like Apple where you make a new all-time highs and Amazon where you're making new all-time highs. It's easy sale and stocks go up easily because there's no pain. Everybody's in pain in these stocks. So that's why they're hard to come right back. Because if Baidu gets back to 200, everybody who bought it at 200 in the last 2 months, thank you for giving my money back. There's willing sellers all the way up there, overhead supply. So it's always tricky to try to call a bottom on a stock that's going straight down.
Somebody asked about what ARK is doing. ARK has not been buying these stocks. ARK has been selling Huya pretty consistently.
She's spooked too.
Yeah, there was another one that she was selling. Teo's Tencent. She's been selling some Tencent. Yeah, I'm just looking at the last week. And she has not been. She sold some JD last week. Yeah. That's
She's lightening it up too. There's too many unknowns over there right now.
Yeah.
And stocks aren't, you can say, oh yeah, relatively speaking, some of these Chinese stocks are cheap when you look at valuations over here, but we don't have the China risk to it either. Right. So nothing is really cheap anywhere. Like people, that have a lot of cash are like, oh yeah, what can I invest in? What, where can I put money? I'm like, I've been in my investing dollars, my trading dollars are always going in and out, but my investing dollars have been sitting with quite a bit of cash here because nothing is cheap. There's nothing cheap right now. It's not like reopening trade is starting to get cheap though.
Let's talk about that because it's
getting better. The reopening trade is actually starting to get cheap.
We can look at anything in the reopening sector, but yeah, some of it's not looking that terrible. I know Mitch was trying to nibble a little bit, but like here's Carnival, for example, right? It doesn't look that bad.
Yeah, I mean, it looks horrible on the chart. It looks broken. It looks, but it's not like we're chasing here. We're not chasing anymore.
Right.
Yeah. So from my investment dollars, I'm a contrarian investor. I do buy pullbacks, significant pullbacks, when stocks I feel like get too cheap. The unknown with the cruise lines, the unknown with the airlines is how is this going to go? Is everybody going to be excited? We really were pumped. Everybody's going to go on their cruises again. Then when you're hearing the first cruise launch and you're getting some of the staff that got sick and then COVID and they were vaccinated, but they still got COVID. I mean, this is something that's just not going to be easy sailing, pun fully intended. So I don't know. You got the airlines, you got Disney, you can group into that to a certain extent too, although Disney has the Disney Plus, which helps them to kind of be best of both worlds if you want to look at it that way. I've owned a little bit of Las Vegas Sands. Mitch was talking. Maybe we could bring Mitch on here too. He's got a couple reopening plays that he's been eyeing. They've been beat up. He thinks there may be a shot here too. Mitch, are you kicking around in the background?
What's going on, guys? How we doing?
Mitch, how are you? How's your weekend?
Hey, another good weekend. Enjoyed it. I don't know if you saw it, but smoked a nice pork shoulder. Gotta have some pulled pork. I
gotta get out there. Once they open these borders, I'm coming. You're gonna do some barbecuing for me because you do a great job.
You said you were smoking. I didn't mean that meant you were smoking barbecue.
Yeah, Mitch always smoking. He's so good. He's a smoker. Barbecue
where
smoker.
Am I from? I'm from Colorado, man. We're doing all types of smoking out here in Colorado.
Multiple kinds of smoking. Fair enough.
All right, let's go ahead and let's take a look at some reopening plays. I'm looking at hotels right now. Marriott chart looking good. Nice downtrend. Good support right there. That's why I like that. Huge. Yeah, huge on that one. And then you could also look at Hyatt, H not looking too bad also. Hilton doesn't look that bad, but just doesn't move that much. It's too slow,
it's
not sexy for me. But then, those two I'm looking good. And then a vacation rental play that's an interesting one. It's a resort play. It falls under resorts and casinos, which is VAC, which is Marriott's vacation holdings. So that you're talking, let's say these are those long-term holdings, timeshares, those kinds of things. I think those are going to come back into play. People are going to be wanting to go on long-term vacations.
Right.
Maybe VAC comes back into play here. What I like is that big volume. You see that big spike of volume? I think if you can get back above that day.
I don't know what that's about. What is that about?
I always look for that sneaky volume.
Is that the 25th?
Washout day? Well, I actually was before the washout day, though.
Yeah.
That's why I was interested. I don't know if it's a buyer that got stuck there and it's going to come back towards him, but we'll see.
I like some of these charts, and these kind of, are obviously not easy breakout charts, but breakouts haven't been working well in 2021 anyways. The one reason that I do like some of these is that, the reopening trade one I don't think is dead, and the market is starting to price it like we're in trouble. There's Delta variants coming. We're seeing cases go up in certain parts of the country, around the world. Japan's got problems because they're not even going to have fans and for the Olympics. And everybody's kind of like, I'm done with your opening trade. I'm piling back into tech where I know I'm safe. So tech becoming crowded again. Reopening trade not crowded anymore, which I like as well. And I do like that candle from Friday where we had a nice snapback rally in all of these stocks. Now, the one thing I would not do is chase. So we had VAC, which was trading at 148 on Thursday. And again, I was saying even on some of these other stocks, I would lean on the Thursday lows. So if you get a pullback here where, VAC maybe got overdone, rallying $10 in the day, but maybe you get back down to the mid-range, like 155, and then I'm going to lean on Thursday's low as my out. So on a little pullback here, this is, what I would eye up. So I think VAC maybe ran a little bit too far because it's up $11. I'm definitely not chasing it. I think you need a pullback in a lot of these names to really get me, like a pullback to near the Thursday lows. But at least now I have a bogey. Now I have a point. Now I have a spot where I can, this is where I can control my risk from. And I know you're going to go into one more, Mitch, and I'm going to let you do that as well.
All right. So the only thing I'd bring up from here is don't lose your eyes on media. I think media is going to start coming back. I know it's kind of a weird reopening trade, but you can take a look at that. Take a look at medias. Let's look at right now. I'm really looking at Discovery, but Viacom's starting to bounce back a little bit. I know a lot of talk is starting to watch these again. And one of the things is, I mean, we know why these got hit down, right? And so my question is, where does the kind of valuation kind of meet here? I think in at least in Discovery, I think it's definitely getting towards that point. I like that one more than Viacom, but it's up to you what you really prefer there.
It is in Discovery. I actually had this long for about a month, and it just wasn't. I had it on for a swing trade. I thought, I was going to lean on the lows in mid-June. No, maybe it was even before that. It was somewhere in there. I never really got down with it much. I was up in it. I was up as much as 5% Discovery, so I can't remember where I bought it. But last week it started to break down again. I was like, I don't like it making new lows, so I actually cut out and took a 2% loss, I think, on it. So you take your losers. So stock making new low, I always say you got to go. And Discovery actually took out its June low, I believe. If you're looking, there's two stocks you can look at, DISCA or DISCK. But if we look at DISCA, they're both fairly widely traded.
Yeah.
You had all those lows like 29, 28.89. And then just 2 days ago, we took it out down to 28.28. Did snap back. So this could be the undercut and rally, which could be, which could be something too. But if you take out the Thursday low, again, Thursday low is the bogey for everything. So 28.28 would be my bogey on Discovery. If you're taking a flyer here around 29, you're only risking 70 cents. It's not too bad, maybe 3%. If you think the low is in. Again, you're fighting the tape here, though, and these stocks just seem to keep finding sellers. I kept thinking you're going to get a bounce, you're going to get a bounce, eventually you're going to get a bounce, and we just haven't seen it. So I don't know what's the catalyst. Maybe it's going to take some news in the sector. Maybe it's going to take an earnings. Maybe it's going to take some rumors or something, but I'm not sure the catalyst to really kickstart this from getting out of favor, because the stock's been massively out of favor.
I've been seeing a lot of people talk about Viacom, and I don't really understand. I don't really get it. Like, I understand there's the inclination to say, oh well, okay, it's given back pretty much all of its gains that weren't really justified in the first place, right?
Yeah. The monthly chart shows that.
Okay, so it's giving back all that nonsense, right? And people are saying, oh, they've got the streaming thing, they've got, I just, reasonable valuation. I don't see it, right? I'm with you. Whoever was in the chat just said old media. Donkey limit, old media, reality pulp shows. Yeah, short. I totally agree. I don't see it. I don't see it. I really don't.
Is it the sporting stuff that comes up with a lot of Viacom? I think there was talks that they could potentially team up with I think Fox or something like that, and there was
I mean, what's Fubo do to this though? What is, like, there is competition coming there too. There's so much competition,
the local sports.
Yeah, there's so much competition all over the place here. I mean, Viacom CBS has been a company that let's forget about this 2021 move. This company has been out of favor for forever. I mean, this has been a stock that has been a perennial underperformer. It was $67 back in 2014, at the crunch when we had COVID, which is, you probably should eliminate that because, everything got stupid and COVID got down to $10. So, but let's say, 20 to 30. I mean, we're really back to where we were when we hated the stock back in 2019 at 42. So if you ignore that whole, what's the guy's name? I forget.
Archegos. It was Archegos. Bill Wang. Bill
Wang. If you ignore the whole Bill Wang BS rally and take that off the charts, the stock is still in a clear downtrend. And it's a snapback 2020 when everything bounced back, but the stock was hated. The content is there. Like I said, I want to like these stocks. I want to get on board with you, Mitch. Here, it's been like 3 months and it just can't rally. When something hangs out the lows for this long, I'm just saying, it got down. It went from 100 to 40, and it's been basically Viacom hanging around 40 VIAC for the better part of 3 months. When something hangs around this long, eventually you just feel like it's got to shake everyone out and undercut or do something to get everybody out of there. Maybe Discovery just did that, but I don't know. I have trouble because it didn't snap back. And if 3 months it can't snap back, what's the catalyst to make it snap? Like, what's the catalyst to get this going? I can't see it.
I'll tell you, I have a good segue here going into Disney talk and a little AMC. I think it's an interesting, definitely conversation to bring up.
What's the Disney talk AMC? Let's go.
So recently, just released this weekend, you had Black Widow, right? Black Widow made $80 million throughout the weekend.
Yeah.
But where did the money come from? And I think this is really the interesting thing, right? So Disney, if you look at the bottom, they generated more than 60 million from Disney Plus. So 60 million of that 80 million gross came from their platform, their streaming platform. I don't know what this says, but
I thought that was an addition. I thought that was not the 80. I thought the 80 number was from the box office. I mean,
was the 80 million from the box? But 80 million isn't that. Remember the box office used to get 200 million. Remember the big numbers we get on the weekends and stuff.
Okay, so even if it's let's say it's half the gross, almost half the gross is being made off the platform versus the actual box office. Like, you know, so what's going to go on with AMC? Is this the end?
I think the 60 was in addition to the 80, but the other point, to Mitch's point, is that the studios like Disney, et cetera, they're in a position now to basically renegotiate with the theaters, right? And every time there's a big release, or like Disney gets a bigger cut of the big movies, whenever like the Avengers, for example, when that came out, Disney got more than their usual cut, right? And they're in a position now that they can renegotiate basically a la carte every single time there's a big release that comes out. They can just say to the theaters, we want more, we want more, we want more, because they have their own platform now. They don't really need the theater per se for distribution as much as they used to, and need them at least. So they're in a position now to get more. There are fewer, big draws than ever, but when the big draws come, the studios are in a position to go to AMC and say, hey, AMC, we want, whatever. We want 30%, we want 40%, and we're going to demand, your top 3 screens for a month or whatever it is, right? The theaters have basically no leverage in this situation.
Yeah. I mean, even worse, coming up this weekend, one of the biggest movie releases of the year, Space Jam coming out. Get ready.
Why do they keep calling the same movies? Is Michael Jordan in this one too?
No, they did smart. They went for LeBron James, man.
They got LeBron James.
LeBron.
Yeah, that's it.
Yeah, no, but really the key thing is this is going to be on HBO Max, and you only have to have that $15 service to go ahead and get access to this movie.
You've got an issue here, and I don't know what none of the AMC people want to. And maybe it doesn't matter because AMC is disconnected from fundamentals anyway. So the AMC's fundamental talk doesn't seem to affect the stock anyways. But you're making a great point. I mean, Disney and the content providers have a lot of leverage here. Spencer making that point. And you know what? I look at this and I think, why not own Disney? I mean, if I wanted to get a play on this and they've got the leverage, why not own the company that has the leverage? And, Disney had a nice snapback rally too. So this whole strategy of leaning on Thursday's lows applies to the stock as well. If we get a pullback here today, maybe we do, 170, maybe get a shot at Friday's low, 174. Maybe you take a shot on Disney because this is, obviously it's the parks they're worrying about here now more than anything. We know Disney Plus is firing on all cylinders. But if the reopening trade does turn around, Disney's going to be the best play maybe for the reopening trade. Like that part of it. I mean, where are people going to take their kids when we actually can go, get back to normal? Disney World. So right. I think if you really are a believer, I'm not saying necessarily I'm doing this, but I'm saying if I was a believer and I wanted the best reopening trade up there, it's probably Disney. And then if we actually do go and, and it doesn't go that way and the reopening doesn't go well, you get Disney Plus to fall back on. So I like Disney in the low 170s. I don't own any of the stock right now. I want to own it. I've wanted to own it for a while. I think this is the one you buy. But low 170s, and I'm not chasing. Don't chase anything in here. No reason to chase.
The last thing I'll add on the whole cable thing is that the current rights deal with the NFL expires next year. So God forbid, CBS loses that. Now there's a catalyst to the downside. That's kind of the moneymaker right there is the NFL on Sundays. So that's up for grabs next year. They're gonna have to compete with Amazon and all those companies again. So just to have that on your radar. Okay, it is what?
Looks like I'm getting a little hate in the chat. They don't want the money Mitch picks. Gonna have to
they
keep
don't want,
the money.
They're kicking you out.
It's okay. Guess what? It's okay. I'll keep the money to myself. Okay. The money ideas are right here in this brain. I can keep them to myself. It's okay. I mean,
they don't want the money Mitch picks.
If you don't want good picks, if you don't want good ideas, good research, good stories, then don't come to Money Mitch. I'll be making other people ideas and getting them the industries.
Oh, all right.
They hate on me. They hate everybody. It's always, you know what? It's 90% love in the chat. It's 10% hate. There's always hate. So I'm trying to just ignore the hate. I get hate. I say something controversial, and I always have some pretty significant hate.
Well, sometimes when I see you on Twitter, I can't ever tell if it's you or if it's a fake you. You know what I mean?
Oh yeah, the fake Triple D traders. There was another one over the weekend, and they went as at Triple D Trade. But then it's like smooth. Like they actually, so we were reported. They changed the whole profile because they knew they were under investigation from Twitter, and then they survived. I mean, they survived. Actually, usually when you report these, they take them down, but they did not take these down. I got the rejection notices. Notice that this actual account survived because they changed the entire profile, including the name at Triple D Trade. They changed that name. If you click that Triple D Trade, it would bring you to another person's profile. It's like, wow, that's smooth. So they knew they were under investigation. They changed it all. So they're staying ahead of Twitter. So again, just to say, I'm not asking anybody for Bitcoin. If somebody posing as Dennis Dick has come to you on Twitter and asked you to invest for them, I don't even trade Bitcoin. I own a little bit of a long-term portfolio. Don't give them money. It's a scam. You keep trying to, I can't stop people from creating a fake profile of me and pretending to be me. All I can do is report it to Twitter. I reported this one. Twitter actually rejected it. They actually rejected and said that this account didn't do anything wrong, although they're trying to ask my followers because they disguise themselves in the investigation. So Twitter, not very good at this. But anyways, it is what it is. I've applied for verification. It's a tough process. They haven't told me yet or not, but it's tough to get verified on Twitter.
Yeah. All right. It is 8:37. Actually, it's time for Market Structure Mondays. It's been a couple weeks because we had the holiday. So let's get Tim Quast on here. Talk some market structure. Tim Quast, good morning, sir.
Good to see you guys. Well, that was an interesting discussion. And yes, I've missed you, Spencer. We haven't talked since June.
I know. It's been a couple weeks.
I know, Tim. We've missed you like crazy.
I grew a beard well, it's what you do so there are 2 times a year in Colorado where you want to be bearded. And one of them's summer and one of them's winter, of course.
Why do you want to be bearded in the summer in Colorado?
Well, because you're out hiking, kayaking, rafting, road biking, mountain biking, all of that stuff. You don't have time to shave, so that's why we do it. Of course, the bad news for me is while Dennis, I'm not well enough known to have other Dennis Dicks or other Tim Quasts running around.
Don't be surprised. They'll get you, Tim. They're going to get you.
But but it keeps getting grayer. That's what's dispiriting to me. So but the good news, it'll be hard for somebody to fake the aged visage that I've got. You're timelessly you're timeless there, Dennis. You don't age.
I don't. I'm aging, so I'm aging inside. I'm outside a little bit too. My hair is crazy, but I thought I was losing my hair 20 years ago, and it's still the same. So I'm getting lucky, I guess. So.
Well, let me know your secret.
I don't think I have any.
Trying to hang on to hair, all right.
His secret is no natural sunlight. That's
yeah. I just stay in like the little dungeon cave. I'm not released from this like trade cave ever. So.
Avoid the sun at all costs. All right, Tim, we got some earnings this week finally. What's on your radar for the week?
Well, and I'll preface it with something that Blaise Pascal, the French mathematician, made famous back in the 17th century when he said, "I'd have written a shorter letter, but I didn't have time." Meaning, you'd like to be brief about things, but it's hard on the spot to do that. But you're right. So earnings typically kick off with the banks. So JP Morgan, Goldman Sachs are on the docket, and probably other banks later. I just looked ahead to tomorrow. Yep. And Pepsi report. So you tend to get blue chips, and I think it's always informative to look at market structure for those big companies. Certainly, they're not the kind that are going to give you, extraordinary returns like the meme stocks, but those, of course, come with risk. So I'll tell you what those indicate. And for those of you who don't know what market structure is, they're to me two essential ways to look at stocks, technically and fundamentally. But then What brings those two ways to think about stocks together, how they trade and how they perform as businesses, is the rules that govern how they trade. That is the universal. It's the great equalizer. And market structure is the behavior of money behind price and volume in context of rules. Price and volume are not metrics, they're consequences of what's occurring. So if you're measuring consequences to try to understand what's occurring, there's a risk. There's a risk in technicals. There's a risk in a market where if you look at financial returns to tell you how a stock is going to behave, I give you the FANGs. So the FANGs have crushed it and we're down. Then the FANGs, all of a sudden the FANGs are great. And we're talking again about the great rotation from value back to growth. Well, what if it's none of that? And I can tell you why right? What if it's none of that? So let me show you what these things look like through the lens of market structure, because again, it's the great equalizer. So if you want to follow along, you can go to marketstructureedge.com and you can put your name and email in, and you can see this. That's all you have to do. And you can see what I see. This is what I do every day. And I go look at what the data indicates. So here's, it's July 12th already. It's hard to believe to me. Another sign of advancing
I know
age,
the years just
right?
fly by here, Tim.
Just incredible, isn't it?
Yeah. It's a problem. It's a problem because the years keep going faster and faster. It's like I'm starting to realize that I'm like really 90% through my life, because when you're like 5 years old, the time goes so slowly. And like you're technically like you're only, I guess, 40, 80, you're halfway there. But really, when I look at it, I'm probably 90%, because those years when you were sitting in school when you were 6 years old, that clock went backwards and never moved. And now the days and the years are just flying by so fast. It's like you flush the toilet and the top of the water is going slow, but the bottom of the water is going really, really, really fast. So anyways, I feel like I'm in the bottom of the water and I'm almost flushed.
It's
terrible analogy.
It's a terrible analogy, and yet there's there's an element of verisimilitude, which means there's truth in it, right? So, I follow you. That's the old adage that you get 70 and 10, and everybody I know who's 70 has really slowed down, and I'm not that far from it. It's just frightening how fast.
You're still a young buck, Tim.
Yeah. Well, I'm trying, right? That's why I'm in Colorado. But so let's look at these things. Here's the first thing I would do. I like to put whoever's going to report results into a portfolio, and I want to see these things. What is market structure sentiment? What's the balance of supply demand relative to the axis of 5? And which direction is it going? So if we just take Pepsi here, it's 5 and it's bottomed at 5. It's bottomed at the nexus of supply and demand. The market will tend to do that. It's about 39% short. That means 39% of trading volume comes from borrowed stock. In the S&P 500, it's about 45%, pretty close to that, 44 to 45. Trades about $11,000 at a time. Passive investment behavior is the leader. So that's going to be indexes and exchange traded funds and quants. There's the price. It's in the consumer staples group. So then I want to go look at these data and see, well, what's it been doing? Nothing. Look at this line. It's right at 5. This is very much what core stocks like Pepsi will do. They will be at 5. They're difficult to trade profitably because of that. But if you're a hedge fund, you can trade it profitably by being long and short. So notice what happens here. Sentiment stays at 5. If you're going to get gains in price like we did here in early June, it will correspond with lower short volume below the trend. So the hedge funds shift from 47%, 53% short, 47% long to the reverse of that. And then as soon as the price goes down, then they shift short and short volume moves above the trend. And that will repeat itself over and over. Very difficult unless if you're a long short trader, this is the way to do it. You don't ever have to take any risk. You just have to follow that trend. If the short volume is below the trend, you should be too. If it moves above, you should be too. And you too can be a quantitative hedge fund. Now, if we step back a little further, I like to do this. Let's go back 3 months. That's about a quarter. Behaviors change every quarter. You don't want 20 years of data. I'm sorry, that doesn't work in today's market because the rules all changed. You go back 20 years ago, we were just implementing decimalization. We want to look at the market under the current regimen. But once again, you'd have to go back up more than a quarter to find a good time to trade Pepsi. other than long short. So what's it going to do here? Not much. There's my prediction. It's not going to move much. And look, notice the prices really stayed between 145 and 150. Why? Because market structure has never given us a balance since back in April that indicates more demand than supply. That's what it requires. So traders, that's how to think about it. You want to trade Pepsi? Trade it long and short, and use the trend line and short volume to know where you should be. But you can't expect a big move. So let's go to Goldman Sachs.
Yeah, earnings on Tuesday, tomorrow.
Tuesday, right? Tomorrow. Exactly. Maybe I should go back here and say, let's look at the same things again. So it's 7 and down. So it's gone. The sentiment is a bit above 5, but it's migrating back toward 5. It's not very short, 36%. Clearly, nobody's betting against it. Trades about $18,000 at a time. Active stock pickers, fundamental money is in Goldman Sachs, as you would expect. Why would we expect that? Because people expect that Goldman Sachs will do better than the consensus from Wall Street, the street. So now will it? Well, let's go look at the data. And I doubt I'm going to disagree with that. So go over. I click the icon over here to look at the data. I like to back up 2 quarters because why? Because 2 quarters ago, financials were all the rage. And look at how much time Goldman Sachs was spending above 5. So you'd buy it when it ticks above 5. And it spent all this time above 5. Here's sentiment begins to drop. I'd probably, leave about the time short volume popped above the trend there. As long as it's above 5, it tends to rise. But right there, where short volume pops above trend, I'm out. Could you come back here? You could. As soon as it returns to 5, better is the uptick because there are the returns. And then you stay until you have a downtick or the rise above, short volume above trend, and you leave again. You could do that, and you could make some reasonable returns. So where is it now? Well, sentiment is above 5, but it never got back to 10. It doesn't have that momentum that it had before. Right. And it's begun to decline. Short volume is below trend. That tells me it will get some gains, but we're not going to see what we saw 2 quarters ago. And I'm not sure that people are expecting that. I think that they think the banks are going to do great again. And I look at the data for the banks and they look like this. So would I trade those? I'm not good enough to, like you, Dennis, to trade those. Huh. You would have the acumen to do it and the speed to do it. But for me, this is a risky trade. You might get a couple of 3 days of gains because short volume is below trend. But this tells me that the market's verve is diminishing. I've used this analogy. It's like the velocity of money. It's something the monetary policy thinkers and the economists like to talk about. The velocity of money is how often it moves around. The more people are spending their money, the more velocity there is in money, and the more opportunity there is for commerce to occur and things to grow. When that slows down, economies tend to slow down. And if you look at the stock market, it reflects declining velocity. And I realize there are a lot of people who are saying, well, we've had a great first half. There tends to be a great second half when there's a great first half for stocks. There are plenty of reasons for stocks to grind higher. I get all of that. But those are all things that they're all ideas that don't necessarily reflect supply and demand. Here's the broad market. If we take the S&P 500 composite stocks and compare it over the last 6 months to SPY, the ETF proxy for the S&P 500, look at the amount. See how sentiment was. This is velocity. So sentiment pops above the 6.0 red line. That's where you remove some money. It comes back down and bottoms, put more money back to work, remove some money, put money back to work, remove some money, put money back to work, remove some money. Oh, now what? So the whole trend line has lost its verve. Yeah. To me, this is something that tells the people like me who think about market structure, the weird guys with the wild hair and the gray beard, that is a dangerous condition. I think that I've said this since April, that I think the market is setting up for a surprise. The difficult part is I don't know where it comes. This tells me, though, that money has stopped moving. And at some point, that's going to create real problems for the equity market. And it's not predicated on fundamentals. It's not I could give you all the arguments against it. The earnings are going to be great. because you have tremendous comparatives versus the second quarter last year. That's going to be awesome. Fed is providing great support. Congress is providing fiscal and policy support. All of those things are occurring, and yet I look at this and it reminds me, I like to reference old people like Blaise Pascal and Thomas Gresham, advisor to the Tudors back in the 17th century too, who coined Gresham's law, who said if you create cheap money, bad money, and you say it's worth the same as the good money, the gold and the silver, what will happen is people will absorb all the gold and silver and hoard it and spend the cheap money. And at some point, there will be nothing left to buy. Then prices fall. And I think that very thing is playing out here. So what would I do as a trader?
Yeah, that's what I was going to ask you.
Question.
10 to 20%. 10 to 20% of my resources, I'm in things only with high probability, rising sentiment, flat to falling short volume. Otherwise, I'm not trading that market.
So you're still spooked here, even though the S&P made a new all-time high on Friday. You're still spooked because what you see here doesn't support that.
Exactly right, and that's not uncommon. It is not uncommon at the peak of the market for the market to give you a false sense of security. It did it here. It does it routinely. There's a top, the market shot up. But it wasn't a great time. Then we gave a bunch of that back. I'm not saying, look, I'm not predicting that the market's about to fall apart, but one day is not a trend. To say that the market goes up, the Dow goes up 400 points, and yet sentiment's going the opposite direction, which thing will I believe? Prices are capricious. Prices can be set by machines that don't want to own anything at the end of the day.
Right.
Sentiment is a good read on supply and demand, and I can see that demand is weakening. And if I look across my whole dashboard, every sector except healthcare has rising short volume. And so that means that the supply is increasing and demand is diminishing. Those things tend to produce unexpected declines, and options expire Thursday, Friday, and then next Wednesday.
Tim, does the platform account for retail activity at all? Because as somebody in the chat pointed out, still the retail traders, maybe not entirely, but like some parts of them, they tend to move in packs.
Oh, yes, they do. But remember, almost none of, I know as a trader, because I actually pay a commission, not a lot. I pay a commission at Interactive Brokers so I can see where my trade executes. So since September of last year, I have had 3 trades execute at an exchange. One of those execute, and I trade fairly frequently, not like you, Dennis, but I'm an active trader. And those 3 trades, one of them occurred in an NYSE RLP. That's called a retail liquidity program. So a high-speed trader was paid 3 cents a hundred to take the other side of my trade. And it was a market trade. It was a marketable trade, meaning I submit this to execute at the best bidder offer between them. And the other 2 were at IEX, and they were also market orders. No limit order is ever going to be at the stock market. And what do the brokers tell you over and over and over, retail traders? Always use limit orders. Now, why do they do that? So they can sell it. That's why. They can sell it to somebody else. But that's who the parties that are going to get that order flow are fast traders. 98 to 99% of retail order flow will be consumed by Citadel, Virtu. Hudson River Trading is now getting into that business. By the way, I had a lengthy exchange on Twitter about 3.5 years ago with Doug Sifu before they bought what became the Knight Getco combination. And that's what Virtu bought. And I said, Doug, you can go buy retail order flow and furnish it to a retail liquidity program. And he said, if we could do that, we would be in that business. Well, they're in that business. That's what they did. Once they bought that, they realized, oh, yes, you can. So you buy retail flow from Robinhood and you turn around and you're paid to furnish it at a better price at the exchange. That's the only way that your order flow as a pack gets to the market. The reason retail packs of order flow can cause a stock to rise is because Citadel or Hudson River Trading or Virtu can manufacture stock to fill the limit orders. We've talked about that before. In fact, I'm doing a boot camp on it for the Money Show this time around tomorrow. I'm going to explain how meme stocks work at 3:30 p.m. Eastern time tomorrow. And it's free. You could come to it. Just go to moneyshow.com and you can come see that program. But I'm going to talk about how that works. And I think everybody should understand it. You should know as a retail trader what happens to your order. Where does it go? Because then you can turn it to your advantage. You can watch your own effect in a stock where there's a rise in short volume and sentiment is rising. That is order flow being manufactured to fill your trades. When that goes down and when it returns the second time, you better be out, because now the high-speed traders know that the supply and demand in limit orders has reached a nexus, and then the stock will go down. And it happens very predictably in meme stocks, which you can track right here on Market Structure Edge.
All right. Tim Quast joins our show every Monday to drop knowledge and tell us all about where our orders really are going or aren't going. MarketStructureEdge.com is the platform. Link is up on the screen. Tim, always a pleasure. We'll talk to you again next Monday.
See you in a week, guys. Should be interesting.
All right.
Thanks,
all right. It is 8:50. Wow, time flies when we're having fun. 8:56. I didn't want to cover real fast. CLDX is your big mover of the day. They had some drug news out Friday. Friday night, I believe. And
I tweeted this out Friday night. I believe I was the first one to actually tweet this out. It broke from Dow Jones. I tweeted it seconds after the news broke. This thing, I never took a position on it because there was just nothing in there. I think the lowest trade was maybe 35 or 36, and I was like, you want to pay up 10, 15% for this headline? And it blasted off so quickly. Like, I mean, this is what we talked about in the after hours trading. Some stocks just don't have a market. You think, oh, I'll buy this at 32.5 or 33 or 34. There's no offers there. So I think the first trade was 35 or 36, and it might have been 100 shares. So it really never started trading volume until it was up over 40, and then it started to get a little more active up there. But yeah. Big headline here. This is your big move of the day. It's up 35%.
I mean, it seemed like a very small. This is a phase 1B trial, and they said of the 19 patients who got the full dose of their drug, 18 of them achieved a complete response, and the 19 saw a partial response. So 19 people, not exactly a large sample size, but it's early. It's a phase 1B study. So there will be more, but that's your big mover of the day. Other big mover of the day is this is the meme stock of the day is MTSL. This is just your crazy, trending stock of the day.
It's always one of these.
There's always one, and that's MTSL.
This is your Reddit stock of the day, or your meme
I don't want to call it a Reddit stock because I don't know if it's being talked about on Reddit. But this is your trend. You know what? Let's do this. Let's call this the viral stock of the day, because that's really what it is.
There you go.
It's virality, right? This is the viral stock of the day, MTS, and to an extent, Friday too.
You got to be careful chasing all these moves in these stocks, and I don't follow the individual story. I don't even know if I've ever even heard of this company, so it's a small one.
Yep.
So I know nothing about MTSL, but let me bring you an example of what happens to these, some of these people who are chasing some of these crazy moves. Look at MDLY.
Okay.
Bring up MDLY, and you can see this was a meme stock, or I don't know if it was Reddit or which social media platform, but they were pumping this thing, and it went from $5 to almost $13, $12.94. I mean, a lot of these companies are small penny stocks or small stocks for a reason. I mean, you look at the long-term chart of this thing, all-time highs up, or not even all-time. Back in 2014, it was $160, and it's $5. I mean, you don't want to put serious money into this kind of stuff because this happens. So MDLY had the big gap up back on June the 10th. If you're looking for a quote for it now, you're going to have to look under MDLYQ because it went bankrupt. So it literally at $5.88 they announced that's it. Game over, delisted July 6th, and the stock now is trading under MDLYQ. I believe it's trading under $1. So there you go. I mean, you got to watch chasing some of these moves. Don't put serious money into any of this stuff, in my opinion, because I think at the end of the day, a lot of these stocks that are getting pumped on social media, and they got a high short interest or they've got something. A lot of these companies just aren't very good companies. So you've just got to be careful just chasing random stocks, because you know what? Fundamentals, when stock goes bankrupt, fundamentals hit head on. And this is a fundamental, this could maybe wasn't trading on fundamentals, was trapped at 5, but here you are 2 weeks later, bankrupt company, fundamentals head on, delisted, stock, I believe, is under $1 now.
And Noah was asking who was the typical loser on these pump and up days. It's this person up there.
It's everybody who bought these things. I mean, that's the one thing. You got to watch these. And I don't know who's pumping and dumping. We're not calling people out here. It seems like everybody's talking their book out there. But all we're saying is there is a lot of scams out there right now. There is a lot of people who are intentionally just going and using Reddit and trying to get their stock on Reddit. And Reddit's doing a great job at Wall Street Bets trying to moderate it. you know, because they're having like, you know, certain to even post there now. There's criterion now because everybody's like, oh, I want to pump my stock.
Sure.
And there's crooked people out there that will literally just try to get their, you know, try to buy up a whole bunch of stock and then try to get it into social media to pump it up and then try to dump it into the spike. They're trying to get that, you know, social media buzz going behind their name. It's a classic pump and dump. These things are everywhere right now. So you got to be really careful. I mean, some of these, you know, we have some great research out there. There's some people who really do their homework and do due diligence and find some good stuff out there. And, you know, I'm not talking about that, but I'm talking like there's literally some scammers out there that are just buying up stocks and then trying to get the social media like pump going and everybody talking about so they can sell into it. And it's you that are the loser. I don't typically trade any of this stuff. I don't like trading these small cap companies for that reason, just because there's a hell of a lot of risk. But, you know, there is some, you know, sometimes you trade them and sometimes you get screwed on them too. I mean, so there is, you know, I've been screwed on lots of penny stocks, you know, over the years.
Yeah.
But it's tough, you know, in the long run. I had never made a lot of money trading penny stocks.
It literally is a modern day boiler room, is what it is. Boiler room.
You've got to be really careful.
Boiler rooms are
stuff.
gone, but this is the modern day boiler room now.
You've got to be really careful with this stuff. That's all I'm using that as an example of. You just got to be careful. Like not all of these. And I know everybody wants to. I'm not saying AMC. I'm not saying GameStop. But when stocks are disconnected from fundamentals, sometimes they reconnect with fundamentals very quickly. In this case of MDLY, this reconnected with fundamentals overnight. Like, I don't think anybody saw $5.88. Obviously, people didn't think that they were going to file. You go to the Benzinga Pro, maybe you can see the headline, Spencer, for the MDLY one. Sure. When it actually announced. But I mean, it's $5.88. There's no real hint that it's like now like 50 cents or $1. So on the Thursday, the CEO resigned. Maybe that was a tell.
Yeah.
And then the following Tuesday, they halted the stock. And then on the Wednesday, they announced the bankruptcy. Yeah. So, and now it's in the paint, or now it's off board, OTC.
If your CEO and COO are resigning,
those are signs that you might want to sell.
Generally, not a good thing.
Yeah.
Yeah.
Okay. Yeah. So, and you know, like I said, I've been, you know, screwed in a lot of these different stocks before as well. I've had lots of stocks go bankrupt on me. It does happen. But you know, it's speculative capital. If you're trading around the pennies, I always say I don't use like it's like gambling money. You know, these are call options, and you know sometimes you know these things don't work out. But you know, I get fearful when I see people piling all of their net wealth into like you know one stock, you know, because everybody's talking about this, and this is the next big one, and this is going to go. I mean, it's dangerous stuff. So I don't know. I like to stay diversified, and I typically you know like to stay with more blue chip companies with a lot of my trading. But that's me. I mean, if I had luck with pennies and it's going really well for you, you know, it's do with what works for you.
Yeah.
But I'm saying if you're newer to trading and you're thinking this is the way to riches, it typically isn't. I never met a lot of people that are getting rich off penny stocks besides the people who are actually running these, like you know, that are running these scams. So,
all right. On that note, Dennis, we'll see you tomorrow. Have a good day.
Okay.
Hey, smash the like for Dennis. Let's go. Likes are low.
That maybe some people didn't like what I say because a lot of people that like the penny stocks. So
that's fine.
I just poo-pooed them pretty good.
Like what you like, all right? But
like what you like.
Like what you like, including this video. All right. It is Monday at 9 o'clock. Let's bring on our man Matt Hammond from IPO Warriors to preview. Well, first to recap last week and to preview this week in IPO land. Matt, good morning. How was your weekend?
My weekend was great. How was yours, Spencer?
It was okay. I watched a lot of sports yesterday. It was a great day for sports watching. Let's talk about IPOs, though.
Sounds good to me.
This week, as I understand it, the calendar is a little bit on the quiet side.
It's filling up a little bit more than we had last week. Last week was about as quiet as it gets. And what was on the calendar last week, about half of them were Chinese IPOs that understandably and predictably got pulled.
Killing me here.
I think everyone who sold off on their Chinese stocks at the beginning of the week, at least right now, feels pretty good about that. My feeling on the Chinese IPOs right now is unless they are one of these kind of stealth IPOs or super low float, which seems to be still in vogue, which is pretty much what we had last week. I'm going to want to see a couple of them do well before I step back in the water on those plays. And it's pretty interesting to spectate on, not speculate, to spectate on, but not something I don't want to be, the guinea pig on the next big Chinese IPO that sees kind of takes the temperature of the market, because it's this point doesn't look like any smart or long-term money is buying in unless you're very, very long-term and willing to wait years for this to all shake out. But on the short term, I don't see a lot of upside catalysts for anybody coming in and saying, oh no, everything's great now. No, we're in the the kind of early to middle stages of what's playing out to be economic warfare, and I don't see it being I don't see anyone waving the white flag anytime soon. And until we get more cooperation and symbiotic feelings of mutual participation in these market plays, China and the US are kind of going head to head. So if you want to buy these dips, buy these dips. I've been playing Chinese stocks since about 2016, 17. I lived in China for 10, 11 years. I'm not going back into that pool anytime soon.
So how'd you do last week?
Oh man, I mean, I had it nailed. I called out and I sent out in my newsletter these two stocks, MITQ and SNTG. And I sent out a pretty lengthy newsletter on Wednesday before MITQ went live on Thursday. SNTG was Friday, and I pretty much called them perfectly. Warned that SNTG might debut super high, and that if it did, you probably didn't want to get too close to it. And MITQ, everybody had everything you wanted. The only problem for me was it debuted on the Amex. I didn't have the indication price, and I missed the limit entry. So, I mean, we've all had trades, whether it's an IPO trade, or I'm sure you have trades you remember where you put your limit order just a few cents too low, and then the stock blew up, and you're probably still kicking yourself about it to this day. And this was one of those for me. But I've played probably 100 IPOs or so now. You're going to miss some. You're going to get out early sometimes. You're going to have some losers, and you can't kick yourself out about it too much. You got to think about it till you can take something constructive away from it. Mine was, okay, well, when you know that the demand is there and you can't see it, just way overbid it. Make sure you get in, because missing the bus when or missing the rocket ship when it's going to lift off is worse than trying to optimize. I would have rather had gotten the trade and not been able, maybe not bought as many shares as I could have, than completely miss it like I did. But these things happen, and you got to learn from your mistakes. After that, put it behind you, have a short memory on these things in terms of the emotional impact, and look for the next trade, add it to your memory bank, and move on. So the thing that I talked about in my letter that I sent out on Wednesday was, what are the difference in some of the patterns we see in what are purely low float versus what is what I've come to call a stealth IPO. And the real difference in terms of what they are is a low float IPO is simply a small company with a small market cap. Therefore they're going to have few shares and a low share price. And people have keyed in on these, but they don't tend to experience the same kind of explosive multi-day runs that the stealth IPOs, which are more intentionally pumped, or kind of manipulated plays that we've talked about, how it appears that there's something else going on. And this is such a clear example where Moving Image Technology had hype and was low float because of ties to AMC. They're a digital movie projector. They had a really low float. And people liked all that, but it didn't look like something where this wasn't a Chinese company where they were trying to look like they were trying to launder money out of China, which is exactly what Centage looks like. And Centage Holdings was like a debt collection. It was almost like a loan, like a bounty hunter company out of China. And no Chinese companies are going public right now. Why this company? And what we'll see in a second is, exactly what you want to look out for, because when these debut at a lower price, something in the $10 to $15 range, they're leaving an opportunity for the market, for people like us to get in and play the game with them. But when they debut at a super high price, as we'll see, they don't really want you to come and play, and you're playing with fire if you decide to jump in the water there. So with Moving Image Technologies, as I predicted before, was that we'd get this initial run of halts, I always like to get out at least 80%, 90% of my position on this initial run up. So on the first halt, you might say, okay, I'm gonna take 10 or 20% out now, or I'm gonna wait for the second halt. By the second halt, you wanna be about half out, in my opinion. By the third halt, this is usually where I'm going to dump, the next 30%. And if we get another jump up, maybe I'll decide right then is good enough to exit everything. Maybe I'll hold 10 or 20% to see if we get a day 2 rally. We don't see with the pure low float IPOs, we typically don't see this day 2 rally. There's some hype in the morning, and we've talked about having a Webull account allows you to sell early in the pre-market on this, jump here at say 5 to 5:30 a.m. Eastern. And yes, this right here is a higher sell point than most of day 1, but it was very quickly. I mean, this was a downward. I think there were 2 halts here, and then now it's down at $15, $16. So we don't see the kind of runs that we see with the stealth IPOs. This is usually where I'd sell anything that I had held, just because I don't really need to stick around for day 2 if the only thing carrying this is a low float. But with the stealth, there's kind of the stealth IPO that runs like we saw with CPOP, which I loaded up right here so you can see. CPOP did this like first day, halt, and then leveled out a little bit. And then day 2 was really one where you could have taken immense profits if you held on to maybe 10 or 20%. I think it's a little risky to hold on to a majority of your position or even half your position because you don't know what's going to happen. But holding on to 20% allows you to take a really big win. I mean, you could have gotten out at $60 or $70 on a stock that you bought in for $12 the day before. But this is a stealth IPO. This is a stealth IPO. But the difference is the debut price. Both of these were about $5 on the IPO, whereas NTG, they debuted this at $42.99. So when I see a $5 stock debut at $42.99, I mean, you know that it's not going to stay at that. It's not a sexy company. It's not an interesting company. They don't have incredible growth or an interesting product. This is somebody moving money from China to the West by, selling a bunch of IPO shares to their cousin or uncle or friend in New York from Shanghai, and then buying them back at obscene prices and essentially moving their money through the markets out of kind of locked up Chinese bank accounts to Western accounts. And there was a chance to get some money here if you took the ride from 42 to 52, but it's super risky. I mean, as soon as it turned around, it was back down to 32 in a heartbeat, and it often will not come back at all. This one gave you a little bit of an out if you're a bag holder, but this thing's not, if it goes back up, it might do what TIRX did and go up to 100, and then all of a sudden one day, just without warning, fell 90%. So I don't think that you want to get in these simply because the upside is minimal and the downside is super risky. We saw this exact same phenomenon with JZXN. This was about a month or 2 ago, and it debuted at 45, went up to 49, and then crashed. Now it trades at $5 a share. So obviously something beyond just retail demand is driving the prices on these. And that's why I call them stealth, because they really go live with very little fanfare. They're often put on the calendar the day before they debut, or very rarely on Monday. They're usually like Tuesday for a Thursday IPO. And the dynamics on these are different, so you want to play them differently than just something that's low float. And things you want to look out for are, some kind of Chinese or foreign origin of the company. And then there's certain underwriters, Network One Financial being the most egregious one recently. They're the same ones that brought us CPOP. And, understanding that dynamic of how they handle the pre-debut pricing, through the indication price, is really the indicator that I'm keying off on to determine whether I'm going to play this or not. So if I get something that's just above the IPO price, it's kind of like, oh wait, there's no demand. I don't know how this is going to go up. If I get something that's 200 or 300% of the IPO price in the sort of $10 to $15 range, I like that. That shows me that there's demand here. They're setting it up to run. If I see it 900%, 1,000% above the IPO price, it's time to step back and kind of watch the fireworks from the sideline and just say, look, there might be an opportunity to take a 10 or 20% win here, but I don't want to get involved in something where I could also take a 50% loss if I, mistime this thing. So anyway, That's the reason I focus on these, even though they're not interesting names, is I've made a significant amount of money on playing the right ones, on playing CPOP, on playing VR, AR, and would have done really well. And I helped a lot of other people get some, make some good profits on MITQ. So that's why I see these as huge opportunities, even though they're not, blockbuster names. So we do have a pretty full slate this week, assuming some of these don't continue to get moved and more might be added. Some of these are names we've seen before, so I'm going to run through them since I spent a bit of time talking about those IPOs from last week. Unicisive Therapeutics, we've seen this one just get rescheduled and rescheduled and rescheduled, so I really don't know if it's going to go this week. Some kidney disease, injury biotech, it was on Weeble's IPO offerings, the Click IPO offerings. Roth Capital is the underwriter. People tend not to like them for some reason. The only thing attractive about this is the 2.63 million shares, but for some reason, I just don't like this one that much. Maybe it pops a little bit from, say, an IPO price of 5. Maybe they'll go live at 6. Maybe it runs to 7 and then comes back to 4 or 5. So I don't want to get stuck in something right now. I'm about to go on vacation this week. I'll be gone for 2 weeks, and can still do the show, but I'm not going to try to be staring at my phone all the time while we're out on a boat or something like that. So don't really love this. Don't really love this play. AMTD, we've talked about this again. I've lost count as to how many times. They're a digital banking services firm in Hong Kong. Hong Kong, people say, well, it's not China, but actually Hong Kong is becoming more and more Chinese, and China is not slowly or subtly exerting more and more influence over Hong Kong. In the last couple of years, a lot of other banks and financial institutions are leaving for Singapore. So to me, this falls into the really unsettling area of Chinese, financial and banking and data. I mean, this is in the red zone right now, and they've rescheduled a bunch of times. So I think I don't really want to get involved with this one. Then we have Phillips, Edison and Company, some kind of REIT for grocery chains and grocery management consulting. They do expect to have a dividend. Their numbers were pretty badly hit by COVID, so in some ways this is maybe a reopening play. I just don't think it's a very exciting retail play. So if you want to get in early on something where the dividend could go up, maybe it's appealing to a certain segment of investors, but I don't think we're going to see a big spike on this. So right now I'm looking for pretty high conviction plays. And this one just looks like something that'll trade mostly sideways. Maybe you pick up a point, maybe you lose a point. Maybe you get in early on something that goes up a little and the dividend goes up, but I'm going to probably pass on this one. You've got Membership Collective, which is a kind of upscale luxury co-working space, which reads a little bit like WeWork for elites. And for those of you who followed the WeWork IPO, it's kind of one of the case examples of disasters that, I'm so glad they did an IPO, because it might have been hyped enough to get into, but it was destined to just bomb. Membership Collective has got some sexiness to it. They do Scorpio's Beach Club in Mykonos, Greece. They've got Soho House, Soho Works. So they've got very upscale. They're appealing to a luxury crowd, but their financials are pretty bad. And I think given the comparisons to WeWork and a float that's pretty just average, I don't think this is going to get much movement and doesn't have anything that makes me want to jump into it. F45 Training. I don't know if you guys know or are old enough to remember that Mark Wahlberg was originally known as Marky Mark, and he came out with this Good Vibrations video where he's basically just working out. So he's let his...
This is his chain?
So he signed on, I guess, 3 or 4 years ago as kind of like an investor and spokesperson. Okay. But yeah, this is his fitness chain. Okay. And they're known for functional 45-minute workouts. And if you believe Marky Mark only works out for 45 minutes a day,
no way.
Well, maybe go sign up for F45. They've got they did try to get into some home workouts over COVID because no one was going to their gyms. But they announced in their S1 that they don't really expect to follow this route. So maybe this is a reopening trade. Maybe some people like Marky Mark enough, or sorry, Mark Wahlberg, as I should rightfully call him. But with shrinking revenue, increasing losses, I don't really know that people want to. I just don't know about this one either. So no reason, no compelling reason for me to play this. Sight Sciences. This one sounds a little bit interesting, but I tend to shy away from biotechs, and I'll be on an airplane July 15th, so I kind of have to miss all of these. Medical devices for eye conditions. They treat glaucoma, they treat dry eyiness with, they have 2 devices that are sort of heading into, actual use. And they do have accelerating growth, and from what I've read by other industry, physicians, this seems to be pretty interesting. 33% revenue growth is pretty good for something that's still just very early in the rollout of their devices. 6.98 million shares. This one might be interesting given the other, options of the day. If I was just sitting around my computer feeling a little bit bored and antsy to get in on something, I might play this one for, maybe a half position and just see what it did. It's interesting enough. Sarah Prognosis. This is a diagnostics company that creates biomarker tests for pregnancy, different types of pregnancy issues. And the first one that they have out is preterm. It's a test that predicts the likelihood of premature birth. So kind of interesting, but I don't think it's going to get much hype or interest. And I think looks like one of those IPOs that might debut below the IPO price, and with a low enough float, push it back up. If I saw that and I was sitting around playing it, I might say, okay, well, nothing else to do today. I'll pick up, 50 cents or $1 per share on something like this if I saw the right setup. But I'm guessing that this is not going to be a high flyer or anything to get too excited about. Stevanato Group. This one sounds pretty interesting, especially because it's the kind of play that institutional buyers will like. They do lab equipment, containers, diagnostic tests, etc., and they have rapidly growing revenue, and they are profitable. So 40% revenue growth in 3 months ending March 31st, 2021, 65% profit growth, which is really high for any kind of retail, or not retail, but any kind of physical goods vendor. The only thing that makes this sort of a for me is 40 million shares. That's getting up into that share count area where we're starting to see things kind of trade flat or down off their IPOs. I have to check the date again. I've seen it listed on the 15th and the 16th. If I am near my phone or can trade this while I'm on the ground, I might put in an order for this one. I'm going to kind of feel it out during the week, but this one's interesting. I'm not going to say this is at this point, at this early in the week, I'm usually just crossing the ones off that I really don't want to play so that I can focus on the ones that I might play. This one's a maybe. Bridge Investment Group, vertically integrated real estate investment management with over 26 billion assets under management across 40 states. I don't know enough about real estate. Real estate holdings haven't tended to do much on the first day, so I probably wouldn't play this one. Blend Labs, this one's kind of more in line with what we've seen over the last year do pretty well. But I'm not sure it'll have much of the brand recognition. It's a cloud-based software platform that allows banks to white label digital financial services. So if you believe that digital finance and digital bank services are replacing traditional bank services, there's a little bit of an in-between play, because this company is going to legacy banks and old banks and saying, hey, you need to modernize your platforms and your offerings, or you're going to get left behind. And we have a platform that you can white label and offer, you can catch up, to these digital banks. And they don't have a traditional SaaS model. They have a per transaction model, which tells me that they ultimately believe in their platform enough to do more of a revenue share than just try to sell out their platform. And they have incredibly high revenue retention rate, which means that for every dollar spent by their clients are ending up spending $1.62 the following year. So they're keeping and growing the customers that they have. Revenue is up 104% in the 3 months ending March 31st, 2021. So the fact that they're growing operating losses doesn't bother me too much as an IPO that's clearly in growth mode. The float is just 20 million shares. So this one sort of looks interesting to me. It's sort of like a fintech for old tech. play, and it's got that kind of it's got a lot of those buzzwords that have done well on IPOs, and I might try to play this on the road. And then this one's been on Webull and on Click IPO for a while. It was originally, we covered it back in March on this show, actually. And what makes this interesting is that it's super low float. So it's 2.3 million shares, but it is still available on Webull, which tells me that maybe people aren't buying it up that, with that much demand. That might change by Friday. But it's very early stage device for infusing oxygen to the blood supply, which of course would be helpful for a wide range of treatments and conditions. Getting oxygen into the blood supply helps people recover better. It's less invasive, I guess, than some other solutions, but they haven't even started any clinical trials. They're not really expecting to get any FDA certification until 2022. So if you do play this, I would take, and you do get an opportunity to take profits early on, I would, because I don't see any catalysts beyond, the IPO itself coming for a long time.
Fantastic.
And it does have warrants, which sometimes cause problems with the trading desks on day one. We saw that with Alfie, which has recently, blown up. But on day one, Alfie was a total mess on Webull. They weren't showing the price. It wasn't orderable. And I got an allocation and warrants. It was all confused. Sometimes the trading desks struggle to understand. It seems ridiculous because you think of our trading desks should be really regulated and highly professional. And on top of this, but it's amazing how many times they mess up, especially on IPO debuts. And then the last one we have that showed up on one calendar, and I didn't see it elsewhere, but I did want to cover it because it does look interesting, even though it's a biotech. This is T-Scan Therapeutics. They are a preclinical T-cell-based treatment for cancers with a lead candidate that treats residual leukemia. But what's interesting about this biotech, and even though I tend never to play biotechs, the ones that have done well are the ones that have a platform and interest from other key players. So these guys have a platform that's based around this approach where they monitor different T cell properties, and then they monitor patients who have responded well to treatments and beaten cancer, and those who have not favored so well, and then they kind of adjust their treatments according to those who have done well to recognize patterns. Wow. To improve the T cell configuration. Sorry, I'm not a doctor. I'm not going to be saying these things 100% correctly, but they do have partnerships with, major pharmas, including Novartis, and the float is pretty low. So there's a good chance that institutions or other long-term investors will eat up the shares. I don't see a lot of shares being, liquidated or dumped. This doesn't look like something where they're just going to market to dump a bunch of shares. They're raising money. So if this picks up, this reminds me a little bit of, I think it was MIDI a couple of weeks ago that had a 5 million share float, 5 or 6 million share float. And that was that lab grown implantable organs. And, they have some partnerships as well. And when that one debuted, it, went up like $5 or $6 from about, I think it was 12. So it went 12 to 11 up to like 16. So these can offer good plays on the IPO. Again, though, you don't want to be holding these into day 2 or day 3. Don't be expecting a pop. If you get an opportunity to take some points, ring the register, move on to the next trade. These start trading very, very thinly, and it's with huge spreads, and you can be waiting. You don't want to be stuck in these for a long period of time. You get in, you get out, and then that's it.
Matt Hammond, got to let you run. IPOwarriors.com. Link is up on the screen. Joins us every Monday. Thanks a lot, Matt. We'll talk to you next Monday.
Sign up for the newsletter. I'll be sending up more detail. IPOwarriors.com. I'll be sending up a write-up on these in a couple hours. So
there we go. All right.
research.
Thanks a lot.
Yeah.
Thanks a lot, Matt. All right, guys. Space is really leaking here into the open. It's been leaking the entirety of the pre-market session here. Opened at the high, almost got to 60. There's your opening bell. We're open at $49 after hitting almost 60 at 4 a.m. this morning. So there's your space chart. We talked about this at the top of the show, and auspicious start to the day for that. David Green is live now. He is live trading the open. I'm sure he'll be looking at this stock as well as others. If you have questions, you want to look at your stock, hop into that stream. It is right now on Benzinga. This stream will end. It'll redirect to David. He'll be going until about 11 o'clock. We've got SPACs Attack live today with Nicolo Damasi, director of DMY Technology Group. That's a company that is merging with Planet. That's the company that the SPAC is buying. Nicolo Damasi will be on at 11:15. That's ticker DMYT. We got the Power Hour, Get Technical, Moon or Bust. Might do at the close today. I'm not quite sure because Joel's out. Money Mitch and Trend Spider wrapping up the day at 5 o'clock. And the Rail Report at 7. Okay, that's a wrap for me, guys. Drop me a like if you could. I'd appreciate it. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. I'll be back later. David Green is live right now.